So last week was the prestigious Denver Gold Forum. It is the world's oldest and largest gathering of precious metals commodity companies, and it's been presented every year since 1989. It also showcases 7/8 of the world's publicly traded gold and silver companies. So it is the who's who of gathering for gold and silver companies. And while I did not attend the event personally, I did speak to contacts who did, and I have some insights to share with you guys. One of the largest insights I got was that even though gold and silver prices, when I'm doing this short little video, we have gold at 1530, slightly above 1530 at $1,530.70 an ounce in US dollars, and silver at $18.56 an ounce in US dollars. So even though we have metals prices above 1500 for gold and above 1800 for silver, there is not an environment to do a lot of equity financing deals over $100 million. So my contact who I spoke to about this was speaking with a lot of Canadian investment bankers. And what he heard was that there's going to be a lot of mergers and acquisitions in the primary gold miner space for mid-tier miners. So expect a lot of mergers and acquisitions of primary gold miners in the mid-tier space. Apparently, these Canadian investment bankers are working on a lot of deals now. We'll see exactly how many get done. Sometimes these deals don't work out, but we just saw a deal that was announced in the last couple days, and that deal was Osisko Gold Royalty, symbol OR, as in Oscar Robertson. They are a precious metals royalty and streaming company. Initially, the management team did build a mine, and then they got spun out into a royalty company. And over the last 4 or 5 years, give or take, they turned it into a very large royalty company with a lot of cash flow. However, they have been very aggressive with deals the last 3 or 4 years, and the market has not liked some of the deals, as the share price has gone from, I think, $17 per share a number of years ago down to, it was below $13 a share. So on Friday, September 20th, the stock was at $12.23. And since they announced an enormous deal of over $300 million Canadian to buy this company called Barkerville Gold. So I wrote up an analysis of the deal that they announced with Barkerville Gold. They decided to do a large deal with a lot of equity dilution for a lot of long-term growth. Osisko Gold Royalty Management believes that they bought a very high-quality asset for a discount long-term. In the short term, the market is punishing the company for diluting the shares, for not acquiring immediate cash flow, and for taking on more future risks with potentially building a mine by themselves. So although the company's current business model is precious metals royalty and streaming, the management team in the past did actually build mines and has a geology background as well. So in the short term, the stock may, and this is not financial advice, just my opinion, go down more. And it's already gone down $2 a share in a very short amount of time, because now people will have to wait longer for more growth, and some people will be angry with the additional share dilution. Osisko Gold Royalty already owned a high stake in Barkerville Gold. They already owned a large equity position. And unfortunately for Barkerville, they only had around a $300 million Canadian market cap, and that did not give them enough cash or resources to build a mine that's going to take, as of right now, I think the estimates are at least $400 million in CapEx. And normally those estimates can end up being on the low end. So now Osisko Gold Royalty has the resources. Osisko Gold Royalty has an enormous amount of annual cash flow. They have a large revolving credit facility. They do have free cash flow and very high margins with their royalty and streaming business, but they will also be taking on a lot more risk if the mine doesn't come in on time and on budget. So let's say Osisko commits to starting to build that mine, and all of a sudden the cost of the mine goes from 400 million, and let's say it goes to 600 million, or let's say it goes to 800 million. And these things can happen fairly frequently, because it is very difficult to build a mine, and mines very rarely come in on time and on budget. The odds of a mine coming in on time and on budget are frankly not very high. So they're hoping, I think Osisko Gold Royalty is hoping to sell the project, maybe hoping to sell the project to a senior gold miner when gold prices are higher in a few years, and put a large stream or royalty on it later. Or they're hoping that they bought this asset very, very cheap and that when gold prices rebound, this is going to give them an enormous amount of growth in their pipeline. Similar to Sandstorm Gold. I don't know if I haven't looked at the exact percentages, but I think Sandstorm Gold's Hod Maden deal, they're not taking as much risk because the counterparty that's operating the mine there in Turkey that's going to build the mine, they're an enormous company. So Sandstorm's not going to develop the entire mine by themselves. They're a small 30% minority owner. So this deal for Osisko is a high risk, high reward strategy for more growth in their growth pipeline. With a cheaper stock price, especially if the stock price goes lower, this also makes Osisko Gold Royalty vulnerable to a hostile takeover attempt by, say, a larger precious metal royalty and streaming company like Franco-Nevada or Wheaton Precious Metals or Royal Gold. So if Osisko goes lower, I would not be surprised to see a hostile takeover attempt by one of the larger players. It just seems that there's not a lot of capital out there to build new mines right now. There's not a lot of capital for producing miners who want to fix their balance sheets. And that means, in my opinion, that these companies are going to have to either merge. They're going to have to merge. So a company that might have more cash but not a growth pipeline will have to merge then with a company that has a growth project. That can be economic at the current gold prices or maybe a little bit higher. We're still in an environment where investors, especially institutional investors, are extremely skeptical that gold prices can stay high. There are a lot of articles still coming out in the mainstream media and mainstream financial media anytime gold has a correction that it's going to crash. So this has a lot of mainstream finance people who don't understand Austrian school economics, who probably don't fully understand the global macro situation. They are not bullish on gold yet. Now, there are smart people that are starting to buy every dip that were not gold bugs, like Jim Bianco and Mark Mobius and Sam Zell and others, but those are still a minority, I would say. So if we see gold go to $1,600 an ounce in US dollars or higher, and it stays there for a while, the environment for fundraising to build new mines, for miners to producing miners to raise capital to fix their balance sheets, etc., that can change. But right now, that is not happening. And so unless the financing conditions change, the mergers and acquisitions for the mid-tier gold miners, that is more likely than not going to happen in the next 12 to 24 months. And that means if the miners are not doing an acquisition, they're not planning on going out there and buying a new mine or merging, and they can't raise $100 million or more to fix their balance sheet, that means that the producing miners are going to have to try to lower their costs. Hopefully oil prices don't rise too much. Oil prices looks like, even on the Saudi news, that the Saudis lied about how long it's going to take for the repairs of the Abqaiq facilities. And WTI crude prices and Brent crude didn't exactly go up a lot after that on those news. So as long as oil prices don't rise and metals prices stay at these levels, primary gold miners who are producing gold and producing silver should have, unless governments increase royalty taxes or some other ridiculous thing, they should have better margins. They should have gone from either not having profit to a profit. They should have had either cash flow negative or low amounts of cash flow or barely breaking even to potentially some free cash flow here at these levels. They've been lean and mean for a while, some of them, the ones who did not have bad balance sheets. And the ones who did have good balance sheets and have improving margins, there may be opportunity there to go buy assets for pennies. However, if they do buy assets, try to buy assets that they think are cheap in the long term and that will benefit the company in the long term. If they do what Osisko Gold Royalty tried to do, they're risking their stock price going down, 10, 15, maybe even 20% in a quick amount of time, unless that acquisition is done for immediate cash flow or very, very near-term cash flow. So the market is penalizing any deal that's done if it's not immediate or very near-term cash flow right now. And finally, one last piece, and this is something to keep an eye on, one last piece of information from what I'm hearing. So when Newmont Mining merged with Goldcorp, and it was an enormous merger. They said as part of the merger that Newmont said that they were going to sell off a lot of Goldcorp's assets, and that has not happened yet. So I expect then some primary gold miners, some of these mid-tiers, will potentially buy some of these assets, and some of these mines may actually be producing. So there may be the opportunity for some of these primary gold miners that are mid-tiers out there who have not done stupid things, who have solid balance sheets and improving margins and potentially more free cash flow, who have been more conservative, not as aggressive, to go out there and buy a cash flow asset for immediate cash flow at a reasonably decent price. Okay, well, that's it from what I've gathered from the insights from my contacts about the Denver Gold Forum. So while people are more positive about gold and silver, there still is skepticism. People are cautiously optimistic, and the primary gold and silver miners are still not able to do massive amounts of fundraising yet. And I think that's why you're going to see not as many mines built yet. And also, you're not going to see the miners able to go out there and raise capital to fix their balance sheets yet. They're going to have to fix them on their own with improving margins and improving cash flow and cutting costs. And then that translates probably into a lot more mergers and acquisitions in the mid-tier area. Okay, guys, I think that's it for right now. Thank you. Hopefully you like this update. And thank you very much to my almost 150 Patreon account contributors.